For more exclusive content from CNBC Cryptotrader, hit the subscribe button now.
Cryptotrader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
This week's edition of Cryptotrader starts right now. I'm Crypto Man Ran, and on a week where the markets went on a tear, Bitcoin is now down below where it was a week ago. This week though, Bitgo announced that it's partnered up with Lloyds of London to bring credible crypto insurance to its clients. Later on tonight, we're going to be speaking to Mike Belshi to find out just how comprehensive this product is and whether it will bring new institutional capital into crypto. And speaking of institutions, this week it was the Michigan Endowment Fund that announced that it would be doubling down on its crypto investments with Andreessen Horowitz. Tonight, we're going to be speaking to Scott Cooper from Andreessen to find out what the investment thesis looks like and why Michigan keeps coming back. We look at the announcement by Samsung and ask whether it's time for us crypto users to throw away our iPhones. And we unveil a hot new product that uses a Lightning network to make real-time micropayments to vendors right here in Africa. All this and more tonight on the only channel that's all in on crypto. But first up, let's cross over to Anthony Pompliano for the Wrap with Pomp. And I know there was big hype around last week with the announcement that Samsung's new phone would have a vault for private keys. I must say, I was a bit disappointed that they didn't release a full wallet. What did you think?
Yeah, look, I think that these are baby steps, right? Obviously, we need a lot more infrastructure that's user-friendly to come to market. The ability for large manufacturers of devices to do it, I think, will help accelerate it. But I just look at this as a baby step towards what we all think will eventually be a fully integrated, secure wallet on the phone.
And I've always said that crypto will go mainstream when the mobile providers, either the handsets, the manufacturers, or the networks, adopt crypto. And my theory is, since the primary use of crypto will be done using a mobile phone, the real winner will be the provider that launches a multi-coin wallet that's easy to use and on a mobile phone. What do you think about that theory?
Yeah, the big question is it winner take all, or can there be multiple winners? I tend to think that the vertically integrated solution will win. The big question is just let's say Google and Apple both launch products with a vertically integrated wallet and gain market dominance? Likely, but I think that the vertical integration is definitely the key.
Great. What else are we looking at today?
Yeah, so Bitgo announced that Lloyds of London Network is providing up to $100 million of insurance coverage per claim for lost, stolen, or destroyed private keys. This is a huge deal. Obviously, one of the big concerns is, if I put my money into cryptocurrencies or crypto assets and then I lose the keys, they're destroyed, they're stolen, I lose all my money. That's not, something that the institutional world is really excited about. Now that there is up to $100 million of insurance per claim, I think you'll see a little bit more interest because they feel like, hey, if something does happen around loss, theft, or damage to the keys, I have this insurance policy that will help me recoup my capital. So I think it's a big deal, an important step, and hopefully will elicit many more institutional investors to come into the space.
I think that this story has been underplayed. And later on in the show, we've got Mike Belshi, the CEO of Bitgo. For me, this is the biggest story of the week. I think that one of the biggest barriers for entry for institutions is that they don't understand this asset class, and in particular, how to store it. And for them, this unknown increases the perception of how risky an investment in the crypto space is. Now that we've got significant insurance with a credible provider like Lloyds, it's another big hurdle out of the way and opens up the gates for this huge flow of institutional money. And speaking of institutional money, this week we had another announcement from the University of Michigan that they would be doubling down on their crypto investment with Andreessen. What did you think about that?
Yeah, look, I think this is a really strong sign because of the timing. Andreessen raised the first fund in Q2 2018, I believe. Now, after the market has continued in a free fall, it's dropped all the way, 80-85% since the peak in the end of 2017. The institution is still looking to put more money in. They're doubling down on their investment, even though the market's fallen further. I think this is a really strong sign that institutions are less affected by the kind of price movements, and they're looking at this as a long-term investment. And so investing today at the depths of a bear market likely is to pay very well over a long period of time if that's your position on why to invest in this asset class.
And we've got Scott Cooper from Andreessen on our show later to talk about their investment thesis. But as far as I understand, their thesis is not to invest in the liquid crypto market, but rather to invest in the equity in the underlying companies. And they almost use like a VC type model. Now, my theory is that given that the liquid tokens are quoted every single day, the bear market has hit them very hard and the prices are very transparent. Whereas if you look at the equity investments in the underlying companies, these equity investments don't have that kind of price transparency, and maybe then the bear market hasn't hit them down as much.
Yeah, look, I can't speak to the liquid portfolio, but I think part of what is enticing people to invest in infrastructure is, as we've seen in the internet and other kind of technological ways, the infrastructure is essential to making all of this run. And also that's where a lot of the value accrues over kind of the first 10 to 20 years. And so just like us at Morgan Creek Digital, I think Andreessen sees that these infrastructure investments are equity based. That's where they're putting their capital. Now, the other thing that I will say is a lot of the infrastructure investments are continuing to make money. They're continuing to accrue value, even though the liquid token price is drawing down. Right? If you look at a Coinbase, for example, they did $1 billion in revenue in 2017. At one point, reports were surfacing towards the end of 18 that they were actually going to do $1.3 billion in revenue. And so if they actually made more money in the bear market, they're able to do that by adding more assets, going into more jurisdictions. And so infrastructure investments, while somewhat tangentially related to the liquid token prices, are not always completely correlated. And so you can actually make an infrastructure investment make more money even though liquid prices are drawing down.
Yes, exactly. Coinbase raised around at about $8 billion despite the bear market and a bad trading year. So it kind of shows that the equity market hasn't been hit as hard as the token market.
Yeah, look, the equity investments in this space are just better understood, right? We understand how to value for-profit centralized companies that have cash flow and kind of business drivers that are similar to other markets or the public markets. The liquid tokens, especially the ones that are more kind of on the edge of innovation around incentive networks, utility tokens, these things are not as well understood. And so you have a lot of people trying to figure out how to value them, what are prices in terms of price targets and movements. But I think the equity investments are more steady Eddie type opportunities where a lot of sophisticated investors are comfortable. They understand how that works. They know how they'll monetize their investment, and they're attracted to that space. And so Andreessen's no different.
And any other big stories this week?
Yeah, the last thing I'll mention is Thailand. They recently come out and they've approved legally these blockchain-based stocks. And so really what this is tokenized securities that everyone in the Western world is talking about. Thailand's government has gone forward and actually approved specific laws that are citing how, when, why, and what is allowed around these tokenized securities. The only other place that we've really seen this in the Western world is in Wyoming. There's a number of these blockchain bills that have gotten approved that touch on certain aspects of the industry. And so I think between Wyoming and Thailand, you're starting to see regulators realize that those who are first or kind of towards the front of approving this stuff will really incentivize entrepreneurs to come and use regulation arbitrage to build in their jurisdictions.
So, Ant, do you think we'll all be moving to Thailand?
Look, I wouldn't be surprised if more companies start going there if they're one of the only countries in the world that have specific laws written on how to operate in this space in a legal manner, right? So it doesn't mean that people even have to move there, but if they base their businesses there, they'll have some kind of clarity.
That's the wrap with POMP. Next up, we'll be taking a look at the Bitgo insurance products with Lloyds of London, so stay tuned.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
action. Bitcoin is crashing. We have to sell
Bitcoin is a bubble.
Hodl. 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 I have to find a new agent.
Bitgo announced this week that it will be launching a $100 million crypto insurance product in partnership with Lloyds of London. The product, that's designed for institutional investors, insures clients not only for hacks, but also for loss of keys. The announcement comes in the wake of the Quadriga X saga, where the owner apparently died and now no one has access to the keys or the accounts. The move by Bitgo should be a massive step in building credibility for crypto as an investable asset class with institutional money. With me on the line, I've got Mike Belshi, CEO of Bitgo. Mike, you seem to be building an empire in one of the most crucial spaces in the crypto world, and that's the custodianship of digital assets. Tell us a little bit about what you're building at Bitgo.
So at Bitgo, we've been working for the last 5 years, starting as a technology company, building security solutions for digital assets and cryptocurrencies. We pioneered the multi-sig protocols that are recognized by experts as the minimum bar today. And now we've evolved into actually a trust company. So a trust company is regulated out of the Division of Banking in South Dakota. And that's because of a need for institutions that act as fiduciaries for other people's money to move to a higher level. So we've been working on this for quite some time.
So specifically, let's talk about institutions and why this is so important. Are you saying that in general, institutions don't hold assets on behalf of their clients?
I mean, that's absolutely right. I mean, any other asset class, we wouldn't even be having a discussion about whether they could. Like when you go to trade your stocks, the New York Stock Exchange, you don't give your assets to the New York Stock Exchange. There's an infrastructure that exists, a series of brokers, clearing parties, custodians, banks, and others that take care of a number of layers of security. So you're never relying on a single party. The digital asset space has grown organically, and at a time when banks initially wouldn't touch digital assets because they didn't understand it. So as a result, we've got this ecosystem that's kind of strange. Today, in the digital asset world, we go to the most centralized exchanges to trade this decentralized currency. So yeah, that's got to change.
Okay, so tell us a little bit about what you guys are building at Bitgo. I always thought that you guys were a wallet company because I had a Bitgo wallet on my phone. What are you actually building?
No. We've been focused on the institutional problem for quite some time. And institutions have a very different need, right? So, I mean, as an individual, one of the great things about digital assets and Bitcoin, you can hold your own keys. You can do whatever you want with it. It's like cash. You can store it in your mattress. You can put it in your closet. You can put it in a bank if you want to. But it's yours, and you can do what you want to. When it comes to businesses holding other people's money, we've always held a higher bar for what those businesses need to do. You need to know that, the CEO can't walk off with the money. You need to know that if one guy's on vacation, you can still access your money. So banks and financial institutions, they care about continuity of business. They care about disaster recovery. They care about making sure there's no possibility of insider theft and things like that. So at the institutional level, we put in a whole litany of controls for how we secure wallets, which is very different from what retail Bitcoin or digital asset holders might experience on their own.
Now, Mike, ultimately at Bitgo, are you guys actually holding the crypto assets, or are the institutions holding the keys? Who's holding the keys?
We can do both, actually. So we have non-custodial wallets. What we mean by a non-custodial wallet is one where we only hold a minority of the keys that are required to access the wallet. So when we're in that capacity, we can't initiate transactions on our own. Only the client, only institution can do that. The latest offering, and the one which is growing the most quickly, is the custodial offering. And in this case, yes, absolutely, Bitgo does hold all of the keys. And they're looking for this. I mean, frankly, we've seen hacks in our industry over and over. And I'm not talking about just digital assets, whether you're talking about Facebook or whether you're talking about Google or if you're talking about the US government. All of these parties have been hacked. So for institutions that have never had to hold assets before, whether it be stocks or bonds or LLCs or real estate, and you're asking them to now hold this digital asset, they barely understand how to hold it, much less secure it. They're looking for professionals that come in, that really scrutinize that problem, that remove all the single points of failure, and that's what Bitgo does.
Mike, could Bitgo not be construed as a single point of failure? I mean, if you're holding all these keys, could people not say that since you're controlling millions and even billions of dollars, you may be a single point of failure?
Yeah, I think you can look at it that way. However, there's a big difference between what Bitgo does and what others do. So, I mean, we started out with the entire principle of trying to remove those single points of failure, and we undergo tremendous numbers of audits where other independent parties come and look at Bitgo and how we operate. So when you consider how do you securely hold digital assets, I mean, first, the technology, it's critical. You've got to have a good architecture around that. You want to start with multi-sig, get a good implementation that's been audited and reviewed. But secondarily, you want to look at, how do you operate this stuff? Because you can have the best technology in the world, but if you don't have controls in place about who has access to the keys and when and how does it all work, you can still lose your money. So, we just got a very significant insurance policy, as you may know, and that insurance policy is underwritten by syndicates from Lloyd's of London. These guys scrutinize tremendously the level of detail that we go through to audit these processes, build these processes, identify the key personnel, et cetera. So we take a number of measures there. And the other aspect of this, which makes us less of a single point of failure, is what we can do thanks to this fantastic technology. So Bitgo is actually a couple of different companies. Bitgo Trust Company, actually it's regulated by the Division of Banking South Dakota, as I mentioned earlier, and they have a key. But we're able to actually geographically separate a second key by thousands of miles, so a completely separate entity is managing the additional keys. So we remove single points of failure by continuing to break things apart.
Now, the big announcement that you made this week was that Lloyd's of London, who's a very reputable insurer, is now insuring crypto, and in particular against hacks and loss of keys. This is a huge deal. It sounds like a massive step in making this industry more investable for institutions. Am I right in this assumption?
We certainly hope so. We think this is one of the critical elements to bring peace of mind, to the industry. So because it's a relatively young industry, the layers of protections, like I mentioned, that you would have in other asset classes, they don't fully exist in crypto yet. And this is one of those key steps. In this case, they look heavily at our cold storage. And there's two things about this policy which we think make it really novel and really unique. First off, it's insurance to the cold storage itself. In the past, we've had a few entities that have announced insurance on their hot wallets. Well, exchanges, we know they'll put a very, very small fraction. They might put $2 to $5 million in their hot wallet, and that kind of turns over and over and over. They don't have to put a lot there for their basic liquidity. The bulk of their funds, which can measure as high as billions, is all held in cold storage. So this insurance program is about that cold storage, and that took a little extra scrutiny to get that through the underwriters. The second thing which we're trying to do is really help change the way people talk about insurance. Unfortunately, you need to have a PhD in insurance to understand the subtle details of what's covered and what's not. We think we need a much more transparent system. There's definitely a number of providers in the digital asset space that are saying, yeah, we're fully insured. What does that mean, right? What is the cap on your insurance? What types of risks are covered? Does it cover insider theft by key executives? Does it cover hacks? It's really important that consumers and fiduciaries and institutions can transparently understand the insurance programs that are actually being offered so that we can compare the services.
And does your insurance cover inside jobs by an exec?
Yeah, all the things I just mentioned are covered. As we spent a year trying to build out this program, and it's unique, and we're very proud of the Lloyd's of London syndicates that helped us get there, and they took a tremendous look at how we build things before we were able to put that together. We also had opportunities to go with much cheaper plans. I mean, insurance rates, unfortunately, right now are pretty high because it's an early industry and because the risks aren't fully understood by the underwriters. But we didn't want to take those cheaper insurance programs because we wanted to make sure that our clients can have the maximal peace of mind and know that we're out, taking the biggest steps we can to protect their assets.
Okay, how much does crypto insurance cost? I mean, I know you say it's expensive, but how much does it cost?
Well, I guess I don't really want to go into the exact costs, but the range of it is going to be 1% or more on your digital assets per year. And a couple of years ago, it was much higher than that. It was even 2-3%. So it's come down. We actually think we have one of the lowest premiums around based on what we've talked about. But the insurance industry is a little bit opaque on this. I would love to see more transparency around it. But a couple things you should ask anyone that claims to have insurance. I mean, you should ask them, what is the cap? That is, what's the maximum loss that they can absorb? I mean, that's the number one thing which is going to indicate how deep they've gone. So in this case, we're announcing $100 million of insurance. You can basically multiply that number times the premium, and you can kind of the rate, and you can see how much we're paying in premiums. Then the second thing you should ask about is what's covered, right? So there's a big difference between covering hacks or not covering hacks. And there's a big difference between handling those kind of insider theft cases. The underwriters are only going to take on policies like that if they're able to understand what you're doing and verify that you have controls that are going to prevent those things from ever happening. Because, of course, Bitgo and our insurance underwriters are completely aligned. We never want to see a loss of any of these assets.
That's Mike Belshi, and he's really building an empire. Next up, we find out why the University of Michigan is doubling down on its crypto bets with Andreessen Horowitz.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell
Bitcoin is a bubble!
Hodl. 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 I have to find a new agent.
Crypto winter or not? It seems that when it comes to investing in cryptos, some of the biggest institutions aren't feeling any of the chills. This week it was the Michigan Endowment Fund that announced that it would be doubling down on its crypto bets with Andreessen Horowitz. The $12 billion fund invested $3 million into Andreessen's original fund in June 2018 and may now be doubling down on its investments less than a year later and in the midst of a crypto bear market. So why is Michigan doubling down? And what is it about the Andreessen investment thesis that keeps them coming back? With me, I've got Scott Cooper, Managing Partner at Andreessen Horowitz. Scott, a few weeks ago, we both spoke at a fund manager conference in the Cayman. What was the feeling that you got out there? Did you get the feeling that crypto is now on the institutional investment radar?
Yeah, I think it's just starting to, and I think the challenge that a lot of the fund managers have today is they really think about the liquid side of this market, right? So things like Bitcoin and Ethereum, obviously, that have listed and traded capacity. And part of what we think is obviously the bigger opportunity that we'd love to talk about is what's happening, quite frankly, in what really looks like the startup in the illiquid market today. So I think there is some activity happening, but it's still fairly nascent. So
Scott, why do you think that the liquid tokens are not as exciting to them as the traditional illiquid equity investments?
Yeah, so we really think about, crypto more generally as it's really a new way to build applications, right? And if you think about kind of the way applications traditionally have been built, they've been built on, standardized protocols. And many centralized companies like Facebook, Google, Apple, and others, of course, have been major beneficiaries of building there. To us, what crypto really, we think, enables is a new way to build companies where the nature of those companies is more decentralized. The governance models, the economics models are decentralized, and therefore it becomes a very broad platform for development for all sorts of new applications, some of which that may exist today, and quite frankly, many of which we've never even thought of.
So Scott, is that to say that as per what you guys said on the panel, the listed tokens don't really excite you at the moment, and you guys are looking more at the equity investments?
Yeah, I wouldn't say, it's not that they don't excite us. I would say it's a very small portion of the market. So yes, as part of any broad, crypto portfolio, we do think there is a portion that people, should have and ought to have in the listed market. But we think kind of the bigger opportunity for the long term is a lot of the activity, quite frankly, that's happening in the private markets today, for which you may not see those active on the listed markets for, at least a couple of years, if not kind of 3 to 5 years down the road.
Okay, Scott, let's talk about developing an investment thesis in such an early stage market. What does an investment thesis look like in this space?
What it really looks like, quite frankly, is it looks like a lot of the early stage activity that we do in our traditional venture business. So what we're looking for are, engineers or sets of engineers who say, look, I have a better way to either build the infrastructure for this new platform. And so that could be things like security. It could be identity management. It could be, how to make processing more faster and more efficient in the organization. And there's also a set of people then who are also saying, look, on top of that platform, I believe I can build applications. So we've got a small number of applications today. Things like CryptoKitties, for example, is an application that's out there today. But the bet that we're making as an investor is that as the infrastructure gets built out, the depth and breadth of those applications will be as broad as we have today in the broad internet.
So can you give us some examples of companies that you guys are investing in the space?
One category of companies that we invest in is what we would call picks and shovels type companies. And so these are companies that, quite frankly, may not actually have a token or be crypto businesses themselves, but are servicing the crypto ecosystem. So examples of this would be companies like exchanges. So a Coinbase, for example, might be an obvious example. There are companies in the custodial space, like a company called Anchor. And so those are companies where, again, for us as investors, we will own traditional equity, and we will ultimately make money or not on that investment based upon the appreciation of that equity. A second category of companies, which is where most of our time is spent, would be on what I would call infrastructure companies. So an example here might be a company like a Filecoin, for example, that's trying to build out a broad storage, platform. We are looking to invest in companies like that are kind of basically becoming the building blocks on which over time many other applications might be built.
Scott, give us some insight as to the amount of time that you guys are spending on blockchain and crypto investments. I know you guys are managing about $7 billion in total. Of that, how much is spent on blockchain and crypto?
Yeah, so we have a fund that we raised about a year ago, which this has been publicly disclosed. It's about a $350 million fund that's exclusively dedicated to these strategies. Historically, in our core funds, we've done some other amount of investing. But yes, in the scheme of things, when you look at it across the broad spectrum of what we're investing in, it's probably, 5% or so of the total assets that we're managing right now.
So I know that you guys are one of the first big funds off the blocks to start investing in this space. And today you've got about 5% of your total capital invested in blockchain and crypto. What are the barriers that stand between where we are today and getting the other big funds to invest between 5 and 7% of their capital in crypto?
Yeah, part of the challenge really, quite frankly, is a regulatory challenge, at least in the U.S. So what we've seen is more development of hedge fund structures in the U.S. than we have venture fund structures. And the hedge fund structures work in the sense because those are regulated in a certain way by the SEC, our regulator here. But for venture funds, it's much harder for them to actually be regulated in the traditional fashion that venture funds have been regulated. So for us to do this, quite frankly, we had to set it up as a venture fund, but kind of opt into a regulatory structure that's more akin to what a hedge fund has. So that's kind of thing number one. And thing number two is also related to the SEC here, which is what is the nature of these tokens? There's still an ongoing debate here in the U.S. as to whether tokens are considered securities under the U.S. securities laws. And that has implications for how they get purchased and sold and ultimately traded in the aftermarket. So more resolution on those broader regulatory questions, I think, is probably what's needed to, make this a much more mainstream investment opportunity for more funds.
So are we looking at a 1-year time horizon, a 5-year time horizon? Have you ever seen technology cycles that look like this?
Yeah, no, look, this to us looks very much like what we do in our traditional venture business. So when we raise capital from LPs in this business, we tell them, look, these funds have 10-year lives. And so you should think about liquidity cycles, quite frankly, in that time frame. And oftentimes, liquidity cycles can go beyond 10 years. So this is why, again, as I said, as we think about what we're doing, it's very kind of consonant with what we do in our traditional venture business is can we identify really interesting entrepreneurs who are doing really cutting edge projects and basically effectively provide them the capital to help them build something that over a 5, 7, 10-year period might yield an interesting investment opportunity.
So Scott, it sounds like you have an investment thesis that's very similar to a private equity venture capital investment thesis. What do you do in the case of token liquidity?
So, the way most of these deals are structured is you really are either buying tokens, in some cases, or in some cases you're buying equity in the company, and you might also have a right to participate in tokens at a later date. So We don't know, to be honest, where liquidity will come, in the fullness of time. Our investment thesis and our view is that as these markets mature, liquidity will come in the form of exchanges that ultimately provide secondary opportunities for these tokens. That's certainly a big part of the investment that we're making here. But there may also be some circumstances where these businesses look like traditional businesses, in which case the value accrues to the equity owners, and therefore it may be that these companies go public or certainly get acquired over time, and that might be the path to monetization.
Scott, before I let you go, I've got to ask you one more question. It's a bit of a curveball. What do you think is the most exciting project in 2019?
Yeah, there are a lot of them. Yeah, unfortunately, you're asking good questions, but I can't tip my hand in terms of specific projects right now because most of these are all private companies, and quite frankly, in many cases, many of them actually haven't even launched their services yet. But yes, there's plenty of stuff out there, and quite frankly, that's our job. Our job is to find the next most interesting set of entrepreneurs who are doing things in this area of infrastructure that we find very exciting.
Micropayments have always been an area that has taunted Bitcoin, but with the implementation of the Lightning Network, the increase in transaction speed has allowed for some companies to develop real-world technical solutions that are being used to solve Africa's problems right here on our doorstep. Francois, you are building something quite amazing at Authgate. What exactly is this?
Yes, Ran. So basically what we've done is, for the last 25 years, people have tried to take transactions online. Everything is online. We're going the reverse. We're taking the online transactions back offline. So we're actually making it possible for merchants, physical shops and brick and mortar shops to take payments, Lightning payments.
So what is this and how does it work?
It's basically, it's a small, not connected device, so it doesn't have internet connection by itself. We're using something called BLE, Bluetooth Low Energy, and via phone we can actually connect to this device. Now this device is used by a merchant, so it's a merchant-owned device, and this device enables a merchant to accept Bitcoin Lightning transactions.
Okay, so slowly, what you're saying is that if I'm a merchant, yes, I'm going to have this device somewhere on a lanyard, maybe even in my hand.
Yeah.
And people can use their mobile phone and the Lightning Network to pay me onto this device?
That's correct, yes. And it's the standard Lightning Network function that we use. The only thing that we do is we're taking the confirmation from the internet and basically present it to the merchant in the form of
Okay, so show me how it works, because I'm a little bit confused.
Okay, so I'm just going to do a transaction there to your side. So you can sort of tell me what to pay, what the amount is. Just press the button on your...
So I'm a merchant, I press the button.
Right, that's right. And then I touch your device. Now you give me an amount to pay.
Okay, so let's say I give you an amount of 10 Rand.
10 Rand, okay. So I'm going to write 10 Rand. Confirm it, yes. On your side it shows 10 Rand.
So now I'm going to press 10 Rand and I'm...
Confirm. And the transaction is now done by my phone on the internet. Once it's been completed, it sends the confirmation to your device.
So it says payment approved. Does that mean that as the vendor, I've now got my money?
That's right. The transaction has already been done on the internet. My client node has basically paid your merchant node. You gave me a digital certificate from your merchant node, and I presented it to your device, and your device knows that the payment has completed.
And is this all done using the Lightning Network?
Exactly, yeah. It's the straight Lightning Network. We haven't made any changes to it. We just added a small service to it to generate digital certificates, and the rest is...
So what you're saying is that if I'm a vendor, or maybe even a vending machine, or a merchant.
That's right. Parking meters, any device that wants to accept payments can now be done with Lightning in a very simple, straightforward, cheap way.
I mean, that took less than 2 seconds.
Yeah, about between 2 and 3 seconds. Yeah.
How do you convert between Bitcoin and the currency that was transferred? And in this case, it was the South African Rand.
Yeah, so what we've done is we've recognized that merchants don't really want Bitcoins. Not all merchants want Bitcoins. They want to be paid in the local currency. So what we do is we do a transaction to the merchant with Bitcoins, but as part of the transaction, we also give him a voucher, but you could say, for the same amount in Rands. And the merchant has 10 minutes, or his server has 10 minutes to basically redeem that voucher for the cash value of Bitcoins.
Can he accept Bitcoin and hold Bitcoin?
Yeah, you can do that. Yeah, it's absolutely possible. The only thing that happens on that side is the client's Bitcoin stash, you could say, is reduced over time.
And where is the Bitcoin actually stored? Because it's not stored on this device.
No, it's not stored. That's a payment confirmation device. So we confirm the payment on that, and it's done with what we call a payment attestation certificate that we send to the device. But the device doesn't really do the transaction. It only tells me, or basically my phone tells the device that the payment has been completed.
So the merchant will have to have a Bitcoin wallet at the back of this, as well as a physical wallet for normal currency.
That's right, yes.
Francois, it looks amazing. If our viewers want to learn more about it, where can they go?
They can go to our website, authgate.com. Send us a message over there. We're working with companies that do payments like this. We're not a payments company ourselves, but we enable the payments using Bitcoin Lightning.
And Francois, who do you see using this?
Well, the market is varied. It can go from the automated kind of vending kind of machines, the parking meters and the vending machines and renting and buying tickets and that sort of thing, all the way up to small merchants, medium merchants, even the large retailers can probably use this eventually.
That's all the time we have for tonight. Just a reminder that we are still giving away tickets for the Hong Kong Blockchain Week taking place between the 4th and the 8th of March. The event, which is powered by NextChange, will have over 3,000 attendees and 150 speakers. I'll be speaking on some panels and I'll be shooting a live show from the event. So if you want to join us in Hong Kong, just tweet me at CryptoManRun. I'll see you next week from Hong Kong. Until then, I'll be on Twitter at CryptoManRun, and you should trade well, my friends.
CryptoTrader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.